and welcome to Finding Alpha. On today's episode, we focus on how to identify and invest in structural growth themes through platform businesses. To help us unpack this theme, joining me on the show today is Sandip Agarwal, fund manager at Sowilo Investment Managers. From digital transformation to new age consumption, well, Sandip will be shedding light on why platform-led models could be the next big driver of wealth creation. Well, Sandip, thanks a lot for coming down and welcome to the show.
Thank you, Nigel, and good afternoon. And thanks to all your viewers, your production team, and everyone who enabled this. So before we start this discussion, I would like to just give a disclaimer because we run a SEBI-registered PMS. So we may hold, buy, sell any of the stocks discussed during the conversation in self and client portfolio. Hereby sharing my thought process and industry insight and not providing any direct or indirect recommendation on any of the stocks.
Got it, Sandip. We'll get that disclaimer periodically up for our viewers as well on the screen. So, the regulators are they're satisfied with what you say. But we want to learn a lot about tech-related plays and also platform companies, because today we're talking about tech with a twist. So let's get first, to this question that we discuss quite often actually. Why hasn't India produced, say, a Magnificent Seven type of tech giant yet? Could you tell us what's holding us back? And do you believe actually we're headed in that direction? We're getting a little impatient.
Yeah. So it is a very interesting question. And Nigel, let me tell you that, evolving a platform like Mag 7 type of companies, it takes time. It is a factor of GDP growth rate. It is a factor of how internet is spreading and all those things. These platforms, if you see Mag 7, I am tracking for last 20 years, they have evolved over a period of time. You will be surprised to know that Microsoft listed in 1986 at $750 million valuation only. Mm-hmm. And at that time, US GDP was $4.9 trillion. And we are not yet there. And we are seeing in India, small caps listed at $750 million. Okay. So I think, we in our country also now, when GDP comes in, when GDP starts growing and the incremental money which comes, this money, allows people to spend on different things which generate the need for platforms, and that is how the ecosystem of tech develops.
So, Sandip, just to get this clear, you're talking about Microsoft when it listed as a percentage of the US GDP was how much? Currently, what is it? And if you could tell us, what about our guys? Here we talk about TCS, Infosys, Reliance. Where are they as a percentage of GDP, since you're comparing the market capitalization as a percentage of GDP? Tell us more. So
when Microsoft listed, it was in 3-4 decimal places as a percentage of US GDP.
Okay.
Today, it is in double digit, 13-14% of US GDP, which is a huge number. But if you see the journey also, as GDP grows, the incremental amount which comes up, more and more goes to these players who are in platform enablers. Okay. Because they make life easier for everyone. Okay. So that is how in India, I think if you see today Reliance and TCS, they are 1 to 5% of the India GDP. So they are doing phenomenally well. And I think they have listed at much higher percentage of GDP than what you have, may not be Reliance, but TCS at least, because TCS listed at $10-12 billion in 2004. So we are doing great in my view, and we need to see data in full perspective. We cannot just say that Magnificent 7 is doing phenomenal and we are not doing.
Okay. So you're saying in the coming years, as India scales higher into a bigger economy, you're expecting these companies' market cap as a percentage of GDP to go to double digits?
Yeah, absolutely. I think it will go.
Okay. All right. Now let's talk about the platform business itself. Could you tell us which are the platform businesses that excite you right now? And also there's plenty of talk, right, about getting in early. Pre-IPO and the likes. What is your comment on that?
So, platforms are very interesting business. So I will just tell you why platforms become important and how they grow. So for platforms, one thing is internet spread and internet penetration, which has gone up substantially in last 7-8 years. So India has become a platform-friendly country in only last 8-10 years because our affordable telecom and affordable and good reach and good bandwidth has been available in last 8-10 years only.
Okay.
Now, second thing is why platforms are becoming important, because if you see the fertility rates in last 20-25 years, they have fallen from 2.5 to now below 2, which means that, you are below replacement level. And now you add to that the falling population growth rate, it is now below 1%, which was around 1.5, 1.6% 2 decades back.
Okay.
And now you add to that the nuclear family concept. People are working, both partners are working and all. So earlier, the chotus of your home who used to do your small stuff, bring this thing, bring that thing, that has been replaced. There was a vacuum, right? And that space has been taken by these delivery platforms, whether it is Zomato or Swiggy or whenever.
Right.
So it is a very interesting way, and this will increasingly, as you move forward, this will continue to replace those chotus in the rural. Right now, they have replaced the chotus in the urban and semi-urban. And it needs internet, it needs platforms, and it needs delivery, everything. And it will happen, and it will grow very phenomenally, in my view, going forward.
Talking about the chotus, I used to be a chotu at my home, and I loved it. Go and help out. But I don't know whether the kids will do that right now. But as you're saying, you believe that these platforms like Zomato, Swiggy, they still have a longer runway going ahead. Let me get in a soundbite first. In fact, Sanjeev Bikhchandani, who is the founder and executive vice chair of InfoEdge, explained how no one thought that Zomato's market share could rise to a point where it is now. Let's listen in to that comment.
We got lucky in Zomato that we went there into Zomato in 2010, and we were so low in the first 4 rounds. And then the floodgates opened of capital, and suddenly they got as much capital as they needed and wanted and more.
Yeah.
Okay, and now I haven't checked last week, but last time I checked, the market cap was over 3 lakh crores.
Over 3 lakh crores, that's correct.
Yeah, but so you got to go in early. You got to stay the course. You got to demonstrate commitment and faith and keep on investing. And you have to be right.
Who would have thought after that rocky listing, Zomato had more than 3 lakh crore. In fact, but we also spoke to Swiggy's leadership, who spoke on the dream for Swiggy and where they expect to reach their goal. Let's listen what they had to say.
As I spoke, right, like for us, it's
100
million people 15 times a month. 100
million people 15 times a month.
Yeah.
And, ballpark, when do you believe you'll be able to get there?
See, they say, right, like you overestimate the short term and underestimate the long term. So my heart says, hopefully in the short term, but I think it'll probably be 10 years.
We looked at general data as well. The quick commerce penetration in proper urban, where you would expect it to be very high, still lower than the modern trade penetration. So I think there's still 2 to 3 years of clear opportunity available there. T2, T3 is like whole ocean still essentially actually lying there. We believe, as we said, right, we are in Bhubaneswar, we are in Patna, we are going all the places. Those cities really surprise us. I mean, I think
what's been the biggest surprise in operating in a Patna, in a Bhubaneswar, etc.?
I think Patna we launched, and in like 4 or 5 days it reached universally 1,000 orders without even advertising or even informing people.
Interesting times. Sandip, but tell us, about the entry time. Everyone wants to get into the race early, because they want to make the big money. What is your view on that, about entry, pre-IPO? Sometimes it's very risky as well. A lot of investors you hear who have burnt their fingers. Your take?
Yeah, so, Sanjeev is master of when to enter and how to enter. So no one can probably match him. He's different. But let me give you some data which will give you an idea. So Amazon listed in 1997, right? Till 2015, their net income went up only 20 times. But their burn went down from 21% negative to 0%. And in this period, the market cap went up more than 200 times, right? Now, after 2015, when they became profitable, their net profit has gone up by 117 times, but market cap has gone up only 8 times. The point I'm trying to make is that you have to match, the formula is that, your incremental growth should be much higher than your incremental burn. So your burn ratio has to consistently fall, and when you see that, that is the time when highest value creation happens. Once it starts making profit, all the big institutions come and everyone comes, so your returns will also be a compounding story and not a multi-bagger story. That has been the story across the globe in all platforms broadly.
So Amazon till 2015, the burn ratio came down from what to what?
21% to 0%.
Negative 21% to 0%, and from 2015 to 2025, it went up
from 0 to 11%.
11%. Got up. That's the big swing out there. Got it. Now let's talk about the other aspect. Most people talk about hotels and airlines when it comes to tourism. But you've spoken about some unconventional thoughts that you have, some unconventional angles, including the rich biodiversity and the big cats that India hosts. Could you explain that to us before we get to the market relation? The big cats, that's a big attraction in India.
So I'm a big fan of tigers, and I love tigers. So I will give you some data. There are 573 wildlife sanctuaries in India, and India is the only country where you find one-horned rhino, you find snow leopard, you find now cheetah, which is imported, you have Royal Bengal tiger, and you have Asiatic lions. Nowhere, including Africa, you won't get tigers, right? So this is one country where you get everything, right? And there are more than 400 rivers and more than 1 lakh water bodies. Our team has done research which says that out of 780 districts in India, majority of them, more than 80-90% of them, have water body, hill station, religious place, or wildlife or a combination of 2 or 3 of them. So we are very, very well placed to grow tourism in a big way. And when tourism grows, then platforms will grow in a very, very different way, because to handle such a traffic on an exponential basis and on a year-over-year basis, to give experience and good quality of customer experience, you have to, enable more and more platforms. So I believe a lot of platforms will come in the tourism side.
Okay, all right. But how do you play this theme? If you could help us out on that aspect as well. If I'm looking at playing the tourism play via an app or via a platform, what comes on your radar?
So, right now, even for hotels, we are also, playing through the listed hotels and small hotels and all that. And there are 1 or 2 car travel agencies, we are playing that. But we are very keen that, something which comes and replaces or is a quasi Airbnb in India and gets listed, we will like to play that theme, because this is going to be a very big theme. And also, this theme will also be a catalyst to Zomato and Swiggy also, because when tourists go to a particular place, they will order sometimes in the evening, they will go in the morning somewhere, but in the evening they will like food to be delivered in their hotel or lodge or wherever they're staying.
So from the hotel place that you're looking at, in the unlisted space, I think you're still researching on OYO.
Right.
That's something that you're looking at. And from the listed pack, with all due disclosures, Ecos is a company you like.
Yeah, we like it, but we may or may not be invested. So.
Okay, all right. Ecos Mobility, got it. Now, we have a viewer query that's coming in. And since you're sounding very, very optimistic about these food delivery apps, they are becoming a household habit. So the query is that itself, because you're talking about this, but could it have an impact on health trends? And that's what could position diagnostics for strong growth. Do you agree? How should investors play this theme with regard to the diagnostic space, given that there's going to be so much of eating from out?
Oh, fantastic question by whoever has asked, and thanks for the question. So, see, what happens is right now, whatever food you're ordering from outside, and the foods are being ordered because lifestyle is becoming more and more busy. Both the partners are working. Kids have different choices of food. They need it instantly, right? So, and it is becoming incrementally difficult to get help for cooking food and all that. So people are ordering. Now, obviously, when this food is ordered and when it comes home, you have to reheat. So it reduces the nutrient constituent of that food. So obviously, after 10, 15 years, I believe a lot of preventive healthcare and the curative healthcare will pick up because of these habits, because they have their own setbacks. And I think that is the place where, diagnostic will become very big. And again, in diagnostics, you will see a lot of logistics chains evolving, a lot of platforms coming in.
Okay, all right. Taking that discussion a little ahead then, could food delivery platforms themselves, get into this diagnostic space, and there could be unexpected growth even from here? Could this be an optional value?
It could be, because they already have lot part of that system, but I think this will need different skill set, and I'm sure that if not the direct food delivery guys, someone else will develop and come out with it.
Okay, all right. You're also bullish on other platforms, right? I think Book My Show is something that you've liked. In the automotive space as well, I think you liked Car Trade, if I'm not mistaken. So tell us the investment rationale there.
So, again, rationals are broadly similar. Both the family members are working. They don't have time. No one can go and buy the tickets on the stand in queue and buy tickets. Plus, platforms give you the choice to select the seats and all that, So it is much, much easier. So it is convenience. See, technology and platforms make life convenient, easier, and they save time. And that's why anything which is enabling those, and if they have the right content or right offering, for example, if you go to Book My Show, they have everything, any drama, anything you want to buy ticket for, everything is broadly available. Even the World Cup tickets were available. So basically, they are an aggregator. So I think, they will also do phenomenal well, and they charge a bomb for fees. I have just recently experienced it.
Okay. No, so that's Book My Show, and that clearly, there is a lot of potential. But from a stock market perspective, investor, perspective, they will want to understand, what about Car Trade? I think the stock is up 2-3 times in the last 1 year. It did some inorganic growth as well. Is there a bigger potential for companies like these?
Yeah, absolutely. Because, again, all the platforms are addressing the same thing. They're saving time. They are giving you more choices. They are giving you bids and all those things. So, all these platforms have a very big advantage of giving you everything at your fingertip. And your mobile is basically the place from where you can do everything. So as long as that factor is addressed, I think platforms do well. But in platform business, only you have to be careful that, whoever has the maximum footprint or whoever has the maximum audience, they are the winners. Not everyone can make money because the burns are very high.
Okay, all right. Sandip, I'm just going to drift a little bit away from the platform themes, because, there is some work that I've done with regard to CapEx spend as well. So when a company announces a CapEx spend, you often break it down into 3 broad pieces. So explain that to us, walk us through that, and also highlight where there will be real opportunities. So, assuming someone is going ahead and announcing a big capex, break up the top 3 segments that you're looking at, and where is the opportunity?
So, Nigel, very good question again. So, we roam around in all the important districts, industrial districts in the country, in Gujarat, Karnataka, Tamil Nadu. We try to find what is happening on the field. My team is mostly on the road, and it is a large team which is doing that. So, what we are observing consistently when we speak to the promoters of these companies in the manufacturing side, if you see if the capex is total 100 rupees, then 30 to 40 is core machinery, which is generally imported from China, Japan, Sweden, all these countries, right? 30 to 40% is ancillary, right? You are putting the utilities, you are putting some of the machines which can be made in Rajkot, Ludhiana, or some parts of the country. And 15 to 20% is the shade, the whole development of the site, right?
Right.
We are seeing that in shade, almost it is 100% indigenous. In the ancillary, there are 2 reasons. One, why we are able to develop in India, because the core machinery is not very complicated. It is more fabrication, welding, customizing, and all that. This needs a lot of space, right? And the transportation and the logistics is a very, very big challenge. And that is the reason this is today already being made in India. You see, if someone is announcing 100 crore of capex, broadly at least 60% will be done in India.
Okay.
So that is a very big theme which we play.
So which is the component that's being imported out of the 3 broad categories?
So all the ancillaries, like, the chimneys,
so core
and everything.
machinery and shed is where there is that...
core machinery we import, shed and the ancillary we make in India.
We make in India.
Yeah.
Got it. And which are the companies that could potentially be the plays out here from, which are into these 3 big segments that you're talking about?
So I think, with all disclaimers in place, I think there are a lot of companies which are doing superb work in the ancillary side. And the good part is the companies which are doing ancillary, they are also slowly promoting towards making the core, right? Because the cost differential is huge and they learn and they do reverse engineering. So we have seen great work being done by Anup Engineering, Elecon, so many of the companies which are doing superb work in that space also. And Ajax is also there, Kilburn is there. And you will see more and more unlisted companies coming out in this space which are doing the ancillary or the shade. And this is really, really very core to the country. And, it will slowly move up the value chain. And you will see that 30-40% of core machinery going down to 15-20% in the next 7-8 years.
So some of these companies, Azad, Anup, Kilburn, Shelly Engineering as well, they've already seen a big run. So do you think investors that are getting in, they have to be ready for a longer run? Because the potential is huge, but in the near term, they could have run up a good bit. Would that be a fair estimate?
Yes, you are absolutely right. So, price-earning ratio is very important. PEG ratios are very important. People have to see that because, sometimes this stocks built in next 5, 7, 10 years of growth. So there could be time correction and there could be price correction and, investors can suffer. So that is a challenge. So you have to identify them at a right price. Anyone can identify because you just put in screener, everything is there.
Right.
But right price, right management and all those things, all hygiene factors have to be in a place. But this space is very good.
Okay, all right. Let's focus on Reliance as well. But first, at the recent Reliance AGM, Mr. Mukesh Ambani unveiled Reliance Intelligence as India's AI engine. Let's in fact hear out the man himself and then we'll get Sandip's view on this space.
It is my great pleasure and privilege to announce the formation of a new wholly owned subsidiary of Reliance called Reliance Intelligence. This new company is conceived with 4 clear missions. 1, to house India's next generation AI infrastructure. Reliance Intelligence will build gigawatt scale AI-ready data centers powered by green energy and engineered for training and inference at national scale. 2, to house global partnerships. Reliance Intelligence will bring the world's best tech companies and open source communities together. 3, to build AI services for India. Reliance Intelligence will deliver trusted, easy-to-use AI services for consumers. And 4, to house talent for AI. Above all, Reliance Intelligence will create a home for world-class researchers, engineers, designers, and product builders.
Sandip, lot of queries on this one, Reliance Intelligence. Could you tell us how significant could the opportunity be if you could break it up for us?
Yeah, sure. So, I used to track Reliance when I was in Edelweiss. the telecom part. So I can say you that they are doing phenomenal work. And this, if you see what this strategy is and why they have announced Reliance Intelligence now, it is all well timed. So if you see, Perplexity has made a strategic move by partnering with Airtel for free services, and at the same time OpenAI is giving at 399 rupees per month. Right now, what you need for AI, right? There is a consumer AI and there is an enterprise AI.
Right.
But you need three things. One is the hardware, one is the software, and one is the platform to distribute. So on the hardware, we cannot make all the hardwares today. So what Reliance is doing, they have done a joint venture and they are spending around 855 crore rupees in Jamnagar to buy the servers and the GPUs. So spending that money, they are buying. They're very
Hardware
smart.
sorted.
They don't want to make. Will buy it, right?
Correct.
Then they have acquired. They have tied up with Meta. Meta, people think that tying up with Meta will not do big change and all that. But I will tell you, their Llama model. Earlier it was for developer. Now they have started making it for the larger consumer in place. And you see the Meta hiring. They have hired everyone from the best places. So all LLM players, all the AI architects, everything, whichever best talent was available, from base salary of $100 million to $1.4 billion also. They have hired the best talent in the world, and they are building this Llama. And I believe that the software part or the LLM part will be addressed soon. So you will have the hardware, you will have the software. Now what you need, third part, is platform. So Reliance has already bought Haptic in 2019.
Okay.
And they will start distributing their offering through this platform because they have already Jio, which has all the information, all the data of the consumers. So I think they have built a wonderful ecosystem, and it is a very well thought thing. How big it will happen, how people will embrace, I don't know that. But I think it is a complete ecosystem which is there today.
Okay, so you believe the opportunity could be very, very large?
Yes.
Do you want to put a number to that?
It will be very big. I think, let me put it this way, that, there is a very fair chance of Reliance becoming one of the size of Mag 7 in next 7-10 years if everything goes right. With a disclaimer that, we may be holding, not holding, selling, buying the stock in our PMS or self-client portfolio. So,
and just to clear it for our viewers, LLM is large language model.
Yes.
All right. Sandip, we request you to stay with us. We're going to take a snappy break, come back. We'll try to squeeze in a couple of queries. Don't go anywhere. Welcome back. You're tuned in Finding Alpha. You're on CNBC TV 18. We've got time for one query, and we've got quite a few queries on that itself. That's the new listing, Urban Company. What is the view, Sandip, out here? Do you think that investors should give it a look? Should they be putting their money out there? Your brief analysis.
So I will tell you how I think of Urban Company, right? So I will bring Chotu back into the conversation and also the nuclear family concept. So earlier, our grandparents or parents, whoever was senior in the family, there was a joint family. We used to know the plumber. We used to know some or other person who is doing some kind of work, right?
Correct.
Now with fast, everyone going for work and families becoming nuclear, now, it is not possible to take someone's help. How much time you will ask someone? The guy may not be available at that time. So, that there is a big vacuum that, both husband, wife are working, couples are working. They need someone to come and, solve the problem when they are not there or when they are there at their convenience and all. Now, Urban Company being or any other platform, they are very professional. They track the guy. They do everything. Moreover, nowadays, there are a lot of security cameras put in everyone's home. So you can track from your office also that whether the guy has come, he's doing, your kids are safe and everything, right? So this is phenomenal, right? They are solving all the problems which otherwise used to consume a lot of time. And people generally see that, what is the incremental cost? What is the relevant costing, basically? So I am working in office comfortably and my work is getting done at home. I'm paying 20-30% extra, it's fine, but there is being done by someone professional. Plus, if you have any complaints, they will come back and resolve. Every whole network is there, right? So I think these platforms will again, they are solving a very critical problem for the people and they will do phenomenally well over long term. I'm not recommending anything. We are not invested. But we love the concept of the business.
But you all will be giving it a look
absolutely.
ahead of the IPO. Well, Sandip, we appreciate you coming down. As you're telling us, there's tremendous potential for a lot of platforms. India is not very, very far off of having our own Magnificent Seven. Reliance could be the potential company that makes it to that list or could be heading in that direction itself. And platforms, be it Zomato, Swiggy, InfoEdge, CarTrade, there's tremendous potential ahead. Thanks a lot, Sandip, for coming down and explaining that to us. Approaching tech with a twist, platforms is the way to go. We've got all your disclosures up for you on the screen, so don't worry about that. Well, on that note, though, we'll wrap up on this edition of Finding Alpha. Thanks a lot for watching.